Hi everyone, it's Sunday the 2nd of November 2025 and welcome to the Crypto Club and Digital Assets Weekly Catch-up on Zoom. We never know quite what we're going to be talking about because it really depends upon who shows up and what they want to discuss. Quite often we'll talk about crypto, blockchain, DeFi, NFTs, metaverse, central bank digital currencies, regulation, stablecoins and a whole lot more. Never quite know what this is going to turn out to be like, but hopefully something of interest for you. So we hold these sessions every Sunday evening, 7 p.m. till 8 p.m. UK time. Come along and join us for a future event. There's details in the link below. And with that, let's see who's going to come and join us today. Stuart, good morning.
Hey, good morning to you. Or good afternoon to you.
Or good
Evening.
evening, in fact. Yeah.
Yeah. Crypto's dead at the moment, there's lots of um, people going to blockchain events and so on, but I don't see anything new. One of my friends went to the London blockchain event and had a great fun there trying to get people to explain blockchain in less than 3 sentences.
Okay.
And they couldn't. And it's
Mm.
like, damn, it's a distributed ledger. What more do you want?
Yeah. Yeah.
Yeah.
I,
And
I
they're
find
getting
it
tied up
interesting.
with
It's
layer
what, sorry?
ones, layer two. They're getting tied up with layer one, layer two, and decentralization. Oh man, it's like just explain it simply. Blockchain won't go away, but I think one of the issues is that most people don't understand it's a enabling technology. It's
Yeah.
not the be all and end all.
Yeah. As I describe it, it's an architectural choice.
It's
It,
plumbing.
yeah, yeah, it's nothing much more. But it's interesting as well because you write that people have always struggled to explain it as a technology. They struggle even more to explain what the benefits are because they'll always run off in the, oh, it's decentralized. Yeah,
Yeah.
and is that good or bad?
Yeah.
Well, yeah, well, that's good in terms of if it's truly decentralized, but what actually you mean is the governance around it is decentralized, not the system. They go, okay, well, it uses distributed computing. It's like, yeah, lots of other
Yeah.
things could use that. I could do an Oracle or a SQL Server database. And I've been through all of
Exactly.
this. Yeah.
Yeah.
And it's immutable. And then you go, oh, right, what do you mean by immutable? They say, oh, well, it can't be changed. You go, well, actually, it can, and it has been. It's just exceedingly difficult to. So
Yeah.
I've always had this thing that I describe blockchains as tamper evident systems, as in you can't actually prevent the tampering, but you can provide evidence that it's been tampered with. So
And maybe if you're a state actor, you may be
e-
able to get around that. If you've got enough money,
even then, the ability to rewrite blocks and capture them is such that it would take, as you say, nation state computing or above. So I describe it as like a lock on the shed. It doesn't stop you being broken into, but you notice if the lock's been broken.
yeah, yeah. I think if you own more than 50% of the nodes in any one place or any one blockchain, then you can be a bad actor
Yeah,
and rewrite.
yeah, and that's the thing. People always say, "Well, why would you do that?" It's like, well, it's a bit like taking over nodes on the Tor network. There might be reasons to do it, and that can be quite an effective way of breaching security in there. And
Yeah.
it's the same with, as you say, 51% attacks. There might be valid reasons, but ultimately, it's one of those things that there's an economic disincentive to not do
Oh yeah.
that
Yeah.
because of the very fact that you've probably put so much into this technology, you don't want to go and disprove it unless it's again a nation state activity where you want to destroy something.
Right. Where you want to do something malevolent or to get to something because one of the things that the intel agencies do is to put war games on the blockchain so as they
Mm.
can save. And they're encrypted, they're encoded, they're safe. But, people like North Korea, I guess, have got the money and the technology to be able to make it, well, just get into it, whether it's economically feasible or not. I mean,
Yeah.
so I don't know what's happening in London.
Well, lots of events. Exactly as you say, you had, I think it was London Blockchain Conference,
Yeah,
um, Digital Commonwealth, I think has got another meeting coming up. And there's been all sorts of events by, I think Zebu have been doing some stuff and a couple of others. And I guess fairly soon, actually, just looking at it, that it'll probably be the Christmas party season
right.
where all the crypto companies start having, to give them credit, pretty good parties in London. So, and they'll be
Love it.
encouraging all the new people who are into the space to think that this is the newest, craziest, amazing thing that's going to change the world. And
Yeah,
it's like, I've seen this so many times now. So I guess I'm going through. I know Gartner have got their hype cycle of the trough of disillusionment. So I think
right.
as an individual, I'm probably right there at the moment.
Yeah, I think so.
Yeah,
Even AI funding is beginning to not decrease. Well, yes, it is decreasing over here, but I don't see it going down as much as people predict. I mean,
yeah,
no one's making a profit at the moment, but I think that's, Jeff Bezos can run a company for 15 years without a profit. So
yeah.
what
I
about?
think it's the sheer scale at which they can't run at a profit, though.
Yeah,
So I've seen it for years, where, as you say, you get startups, and they're actually getting from a negative profit situation to break even to profit. It takes a number of years, but the sheer scale of how much they're investing in AI
mm,
capabilities is an order of magnitude different to anything I've seen before.
yes,
If you're going in for a fundraise for a crypto firm, $10 million maybe a reasonable start for a small startup. But it's when you're hearing of initial raises for AI firms of like $100 million, or even, I think that
right.
they're talking about if ChatGPT or OpenAI does an IPO, that's going to be like a $1 trillion one
Dollar.
or
Yeah,
something. It's like, that's big bucks.
yeah.
Because the other thing
What
as well,
I've
people
got,
don't. Sorry.
it's more than I have.
Well, you and I combined, I suspect. But it's when you look at it as well, and how this is why I think we've got a fundamental flaw on how we value companies as well, because we say they've got a valuation of $1 trillion. That doesn't actually mean they've got $1 trillion.
Mm,
It means they've persuaded people to invest $1 trillion. So actually, they're in debt. They're in debt by $1 trillion.
right.
Yeah. Um, but yeah, it's all about the kind of the mindset on there. So
We've got JT joining us.
JT's joining us as well. Excellent. Hi, JT.
Hey guys.
He was in San Francisco a minute ago, and now his icon's gone.
Right. I noticed that.
Are you in the UK at the moment, JT, or
Yeah,
Middle
yeah,
East?
yeah.
Yeah. We're just commenting about how quiet the market is, just blockchain generally, and how it seems to be repeating itself of nothing new, nothing interesting, but lots of conferences to go to hear about how it's going to be the next big thing. Think that's
Yeah,
fair?
it's very quiet
Mm.
until Trump tweets.
Well, I think that's the problem, isn't it? It's currently a market that's being driven by hype from the likes of tweets from governments, either presidents or their sons or whatever, or tech billionaires. But there's nothing actually substantive behind it. It's like, oh, buy this crypto. It's not actually about coming up with the next wave of new type smart contracts or real innovation in any way.
Yeah, it's I think we're going to see innovation to be a big problem. The reason is there's no investment from VCs or startups at the moment in Web3/crypto. Yeah,
Yeah.
it's almost inexistent.
I do wonder if part of the problem is that we're an industry that are not doing ourselves a service by describing ourselves by the technology and not by the benefits. I've had it for years. Stuart and I were chatting before about getting people to define what a blockchain is. It's the same with Web3. You find that I see conferences of how Web3 is going to change the world, blah, blah, blah. It's like Web3 is just, again, it's an architecture, it's a security model, it's whatever. It's not like relational databases or browser-based technology. It's not that we're inventing HTML or something. It's just the way we're using some stuff. Well, are you hearing anything different, JT? Is there any actual innovations out there, do you think?
No, really, not at the moment.
So it's a matter of just going to the conferences and listening to all the latest hype then?
People are going to talk about the market and cycle, and it's all driven by speculation of the top assets. That's what it is for the past year or so.
I do think the focus has been on the crypto market as opposed to the innovation behind the crypto market as well. Everyone's gone in for the speculative, whether it was NFTs or meme coins or whatever. I'm seeing it as well. A lot of people at the moment are tweeting about, Tommy Lee says Bitcoin's going to go to $3 million or whatever. They're all again, they're speculating on prices. They're not speculating on true adoption or anything.
Yeah. Look, my view on this is quite complicated but simple, at the same time, because it's all about everybody for Web3 to work. Yeah, everybody needs to think about retail. Yeah, if there is no consumer, no retail coming to the markets again, then it's not going to work, because people still focus on the top digital assets. There's about 120 something projects to be launched still that got massive investment. Okay, in the last 3 years.
JT? What do you mean by retail in this context, though? Do you mean buyers of crypto?
Yeah, consumers that use the products and buy the tokens of the projects, because that's what made the ICO successful. Yeah. And also 2020, 2021 was because there was massive influx of people coming to Web3 and crypto. Maybe with the hope they would buy a coin and become millionaires. I don't know, greediness that we see in people usually. Maybe that was it. But it's almost inexistent at the moment. People buying tokens outside of the main digital assets are small traders, people taking a bet. Everyone else is on Bitcoin or Ethereum or Solana or some meme coin, like Doge or whatever, yeah, or Shiba. I mean, I can't believe there's quite a few of those meme coins that still have a billion plus market cap. I'm like, why? It's a bit weird, and then having all of those projects that some of them are have good innovation on infrastructure, And those projects haven't done the TGE yet. And these are projects who got investment 20 million plus, or more than 20 million, yeah, by VCs. So without them doing the TGE and launching a token, then we're going to see some drama from now onwards, in my opinion, if things don't change fast, because the liquidity on those projects is going to run out at some point, yeah, and they need to launch the token, and then there's no excitement in the market because alt season hasn't started yet, yeah. Well, is there gonna be an alt season? That's the question.
Well, it's interesting as well. I was looking at a news report. Actually, I was looking at a couple quite funny, really. I thought the heading of this article was quite prescient about how crypto is boring now because basically various institutional organizations are adopting it. But I thought this was curious about the forecast about altcoin growth, because you're mentioning about altcoins, and the analysts behind this are suggesting, because the SEC is kind of like changing its requirements around crypto now, and they're making it easier to potentially register them. They're saying that there's some altcoins that we might see a big growth in, but the ones they're talking about are the ones that are all pretty big at the moment already. So, surprise, surprise, XRP is up there, Bitcoin and Ethereum remain there. Bitcoin Cash, kind of curious as to what I think is going to be on there. But these are all fairly well-known players in the space already. That Grayscale saying that these are all going to qualify for exchange-traded products, and so might be a way of the retail market, as you say, getting back into it.
Yeah,
so
look, those are already listed. They already have a very high market cap. So I don't consider most of those altcoins anymore. I mean, once a coin reaches $1 billion plus market cap, it becomes a unicorn. Yeah, if it stays there for a while, it's not an altcoin. It's classified like that. I don't know why, but in my perspective, I don't think we should call those altcoins, but that's just my personal opinion.
Well, it's where it comes down to definitions, doesn't it? And I think the original definition of altcoin was anything that was a crypto that wasn't Bitcoin. So by definition, everything else was an altcoin.
Yeah.
Maybe we need a new term for like mainstream crypto coins or something. So, Bitcoin, Ethereum, Solana, and a few others. And then the real altcoins are the more edgy type ones. So yeah, maybe it's time for a new definition.
Yeah, so there's a lot of them that are to be launched. I mean, projects like Monad, Mega Ease. I mean, all of these are infrastructure projects. Yeah, other L1s or L2s or a mix of both or whatever. There's so many of them still to come out. And also some which have AI integrated, and some form of AI. There's others that are deep in still to be launched. I mean, the list is just insane, So all of that money from VCs is locked, yeah. And VCs want to capitalize at some point, yeah, which means token is to be launched. Who's buying it? Last couple of weeks, yeah, there was a few conferences around London, as you know, yeah, and I kept asking people their opinion, tell me which project has real users in Web3 crypto. Just tell me, some things that people need to use every day, like they do in Web 2. Doesn't matter if it's an Instagram app or whatever, yeah? An Amazon app that allows you to buy products, yeah, online, whatever, yeah? Tell me which app in Web3 we have the massive number of consumer usage. There isn't.
Mm.
There really isn't. So that's the problem. I think Web3 is just a term, like you said, doesn't mean much anymore, because people thought, yeah, everything from Web 2 is going to be changed to Web 3. Everything's going to have a blockchain database behind, whatever. And we haven't seen any of that. And we're building a lot of infrastructure, yeah? So this infrastructure is going to be for what? For DeFi? That's pretty much where what we have at the moment is DeFi products, yeah, that small traders are using, wannabe traders want to use, and advanced traders are using, and speculators are using. That's it.
Well, it's interesting looking at the number of users. I mean, there's reporting for 2024 certainly of the most popular Web3 platforms. It's interesting. Like Sapien is an infrastructure play, and it doesn't say how many users they've got. Library, or LBLY, that was coming along quite nicely and seems to have gone quiet. Storage, which was a storage technology, again that was growing but seems to have gone quiet. Secretum or Secretum, I've not actually heard of that one. Don't know about that, but it was NFC related. Decentraland, I guess, ties in with NFTs and metaverse, but again, it's gone quiet. Solar, again, it's as you say, it's an infrastructure play. IPFS nodes, DTube. That was kind of like Steam, it wasn't it? DTube, and hasn't had much. Brave, I'm not even convinced you can argue Brave. I think of Brave as the browser, which I'm using it now, whereas this list was having it a bit wider. And a desktop VPN, which is useful, I suppose. And Ethlance, yeah.
But Brave is just a browser, nothing else. Has nothing to do with Web3. They just launched a token, like in Sun 17 or 18, whatever it was, and that's it. That was a way to finance the project with a token.
Yeah.
There's nothing on Brave. There is Web3.
Yeah.
Okay. Yeah, it is. Brave has some features here and there that it's more suitable for Web3. Yeah.
Yeah. And it's curious, Everledger. So I remember speaking to Leanne a few times. Everledger are always described as the poster child of distributed ledger technology because they were one of the few developments who'd actually done stuff. But again, that's gone quite quiet. So yeah, I think Web3 is a bit of a disappointment in that there's nothing new happening.
Yeah, look, there's a few people that tried. There's people.
JT,
there's a few people.
Gloom.
No, it's not. No, Stuart. I'm being really frank here, because
Is it raining where you are?
Like you and myself and Gary, we really like this technology, what it can do. We see the benefits. We see a lot of this, but things are kind of on pause, and that's a bit worrying, to be frank, because all of this money from VCs invested that is locked. They didn't capitalize. The LPs are not providing more liquidity to the VCs, so a lot of VCs don't have money to invest in new projects, which means innovation is being on pause as well.
No. I get a weekly list of what's happening in the Bay Area, and there's plenty of money flowing. The Bay Area being San Francisco. There's money flowing into technology, but it's not flowing into things like blockchain and so on. And what I was talking with Gary earlier.
AI, isn't it? Mainly
AI and more. Yeah. really, blockchain is the plumbing. No one's interested in the plumbing. It should work. And if you want to have an interface to it, make it a Web 2 interface. Make it something that people can use. I mean, right at the moment, to buy crypto is awful.
Mhm.
I mean, could you get your mother to buy it, in 3 easy steps, or would you be on the phone offering level 2 support?
Yeah, I mean, it has evolved a lot. Yeah, and there's better wallets, as we know.
Yeah, but I mean, you hear about, should it be a cold wallet? Is it a hot wallet? Wallets get stolen. You've got these stupid seed phrases that you have.
Yeah,
I mean,
yeah,
I don't have that. If I want to move money from, say, Lloyd's to Barclays, boom, it goes. And I've got plenty of ways of doing it that, even I can do it. My age, I can manage the technology to move money around. If I try to do it with DTC or anything else, I've got to log on, I've got to have a wallet with seed phrases. No, it's too difficult.
yeah. There's a lot of other things happening as well. It doesn't help. But it's good for innovation to a certain point. But think of like this, okay? Imagine there was 1,000 internets. Yeah, that would be really
Yeah.
hard to do anything. Yeah, that's what happened with infrastructure in blockchain. There's thousands of L1s, L2s, ZK, Sync, DC, ZK is there, or whatever. You know what I mean? So, it is a problem because then
There's too many
interoperability.
phrases. There's too many phrases in Web3.
Yeah.
That just don't make sense. I mean,
So, for
talking about
example,
non-fungible assets.
So, for example, you're going to deploy a smart contract, yeah, which adds functionality to your web app, whatever, doesn't really matter, yeah. You're going to deploy in Solana, and then you're stuck in Solana. If you want then to make it interoperable, to make a multi-chain, then you need to integrate with,
An L2.
EVM and whatever. Because Ethereum is too expensive, the transaction, it doesn't matter. But it's just the technology is different. So
We're saying
we
the
have to
same.
integrate with different technology. Then appeared, things like layer zero. Okay, there's other things that solves a lot of those problems. But what I'm trying to say is that so many of them, the money has gone to so many options.
Yeah.
Why? Because
Most of it was gone.
yeah, but why was this done? This was not a strategic investment by VCs or whatever. It was literally because of the token so that they could make money. Yeah, somebody was buying the token and the VCs
It
were
was an
using
attractive way to make
VCs,
money, but it was
VCs were
still
using
some
retail as
business
exit.
case.
Yeah, VCs were using retail as
Have you
exit
ever stood there
liquidity.
in front of VCs? Have you ever raised any money, JT?
Yeah, I did, and it was always about the tokenomics. It was the thing they wanted to know is team tokenomics, the main thing. Okay. Why? Because at some point they wanted to sell the tokens and get the return on investment.
They
Obviously,
want a happy ending. Yes. Yeah. I
I
mean,
mean that's their
they're
job. Yeah.
standard VC terms. I mean, you go in and you present your case. It's got to have a nice story where they can hug their blankie and they can drink their milk and it sounds good at the end because they're going to make lots of money
Yeah.
and lots of people will use it. I mean, that's really the story. Whether you use tokens or whether you use widgets, it doesn't really matter. And
Well,
everything was on about blockchain, this, blockchain, that. It was going to solve a lot of problems. It solved none of them.
No, so
wonder.
it solved
Well, it
quite a
solved
few
some. It
problems.
solved a few, but not what they promised.
So
So
I'm gonna pose a question for both of you about VCs. Then, is there actually at least two different types of VC, which is traditional VC, where they provide dollars, and crypto VC, where they're actually based on tokens? Because to me,
which
I hear
country?
people being
Which
described as
country?
VCs, and it's actually that they've got some Ethereum or Bitcoin lurking around, and they're just looking at reallocating it in some way, compared to a traditional asset management or pure play VC, where they're putting real money in, as I would describe it.
You've got a lot of differences, and I think it's based on the country as well. I mean, in the UK, you don't VCs is a laugh to call them that. They're a bunch of risk-averse accountants.
Yeah.
Yeah, I don't disagree with you,
Yeah.
Stuart, on this, because I mean, investment is a risky business. Okay, we've heard
Yes.
this term. Only 1 in 10, maybe. Yeah, you're gonna get
1 in
some
12,
return.
yeah, typically.
Yeah, whatever. Yeah, so it's around 1 in 10, 1 in 8, 1 in 12. Depends really on the sector. We know this. Yeah.
Yeah.
So in many countries, and not just UK, Europe is very similar. Very, very risk adverse. Do you have the question is, do you have how many users do you already have? What's your revenue? They already have the numbers, and if you don't have that, they will not invest in you because it's too risky. And they are not there to invest from the ground up in technologies, innovation, whatever. Yeah, they are there
What
just.
angels are for. Family and fools, then you go to angels, then you move on. Yeah.
Yeah. So it is a big problem. And I think you're right, Gary. There's a distinction there: traditional venture capitalism versus the investment in tokens by crypto VCs, which started a while back, 2016, the ICOs, yeah, and then it came back in the DeFi summer in 2020, and it was crazy since then, that time until end of 2021. Yeah, that was really.
No, it's earlier than that, JT. It was 2017 through 2019. They would throw money at you if you could actually
That's
say.
what I said. ICOs, 2016 on.
Okay.
So the ICO started in 2016. Yeah.
Right.
Uh,
Okay.
So, and then 2018 onwards, once the Block One and Telegram ICOs took almost $6 billion from investors, and where is the money? Yeah, nobody still talks about that. That was massive taken by 2 projects, and that's what it really crashed the ICOs, because from that moment onwards, there was no recover at all. There was too much money went on 2 projects, yeah, and then of course 2020 DeFi summer was a bit crazy, and 2021 we know what happened. So all of that, was people getting excited, new projects, innovation, tokens launch, VCs putting a lot of money, but majority of small traders and VCs spotted in late 2021 that they were the exit liquidity, for the VCs. And then these projects never took off. Really, the token was there, and majority just really dumped. That's it, That's when did it dumped? When FTX collapsed. Well, it was before FTX. Was that when was it? In May 2022, when there was a few projects like Luna, Terra Luna, and a few others that really collapsed. That was bad, really bad. But it recovered during the summer, and then FTX happened in November. That was really the killer. That was complete killer for alts, for projects, for everything. And that's when retail realized, we were the exit liquidity. And it doesn't matter if it was in some token or if it was NFTs. I mean, there was NFTs going for $60 million. Whoa, crazy stuff, So I think the only way forward for Web3 to revitalize the market and get excited again is the crypto laws, what's it called, market structures bill in the US being approved, but the government is shut down. It should have been approved by end of September, beginning of October. Government has been shut down since then, so has not been approved. And I think we are for a new era of ICOs. Okay, because once that's done, that means any company can set up a token in the US, and I think that's gonna be a new innovation era. When it comes to, and we talk about blockchain. It's just not blockchain. I wouldn't call Web3 blockchain. It's an evolution of what we have had in blockchain. But it all depends really on the US at the moment. I don't see, otherwise it will continue the same. Treasuries, stable coins, and I don't see many projects being launched successful.
So do you think it's going to be more of a growth again in what was at one point went through its own hype cycle, which was DeFi as a more general thing then?
Yeah, it's going to be more than DeFi, but there's a lot of projects, very interesting projects that imagine now that an Amazon can launch a token or an Apple can launch a token, for example, Google.
But I was involved in some projects years ago around creating that capability, so that if someone like Apple or Amazon or BrewDog or whoever, if they wanted to have their own token, then I was actually involved in a project that was creating that capability, and again it all died away. So maybe we'll see it come back again.
Yeah, look, things haven't happened in the US because the SEC was killing crypto since 2021, and that's the problem. Now once you remove all of those crazy things that they were doing, and you put some legislation, we know that regulation drives adoption, in every sector. So I think we're in for a big boom. Yeah. The question is when. I'm a true believer in this, and I think Coinbase is preparing something with Base as well, the L2 and a few other things. I see them moving around a little bit at the moment, and there is some things that they've done, like in the last 2 to 3 months, indicating that they are preparing for the next stage.
Okay, because I found it interesting as well. I was taking a look at like in terms of DeFi protocols and that, by how much is actually locked into them, that kind of thing. And I've got a top 10 list here, and what I've found quite worrying, in fact, is things like Aave and JustLend and Sumify. They're all lending platforms in some way. And it really bothers me that we might actually be going back to creating another debt-based economy, in effect. So we'll see on that. But you reckon Base are possibly doing some stuff?
Yeah, look, Base and Coinbase and the whole ecosystem. There was some acquisition as well. I think was, if I'm not mistaken, I was reading some stuff. This was like a crazy week for me, but Echo, I think is one of their. I think it was an acquisition by Coinbase, if I'm not mistaken.
Was indeed. Hang on, I've actually got the press release on that. We'll share it. It's on the 21st, so a week or two ago. So
I think they are preparing for. That's my take at the moment. Don't get me wrong. I know nothing. Nobody shared with me anything. Okay, but I think they are preparing for some sort of launch pad to help launch tokens for all of these companies in the US as soon as the legislation is available. They will. And capitalization is what is needed at the moment, yeah. And I think then with Ecobase, Coinbase, and a few other things, they might be preparing a massive launch pad that allows them people to invest in whatever tokens, in whatever projects. That's my take. Maybe I'm wrong, you know.
It certainly looks quite possible if you read the press release of what we're talking about. It looks like it's a way of providing access to investment again in a slightly different way, and again through private token sales. So it's kind of like TGE 2.0 or ICO 2.0.
ICO 2.0. I've been saying this to a few folks. Everybody's dismissing me. The guys that I know for a while in crypto, and I'm like, dude, no, I just.
But it's funny where they're talking about investing in private token sales. So I remember a lot of that with ICOs, where there was a pre-sale quite often, which was, in fact, there was usually multiple pre-sales. There was the favourable mates rate pre-sale, and then the private pre-sale, and then the launch, which is usually where it would rocket up for a moment and then plummet. So maybe by having somebody a bit more credible providing that capability, it might improve it.
Just think about this, yeah? If Apple decides to launch a token, yeah, where would they go? With who? Who's going to help them to do that? They have the money, obviously, 300 billion in cash, whatever it is. I lost track how much money they have in cash, but having somewhere, think about this. If you're going to list on a stock exchange, you need to go do a pre-IPO, IPO, all of that stuff, okay? So think about a big brand or even a small company in Minnesota, When I say small, I'm talking about $1 billion company, come in and say, yeah, let's tokenize our profits, let's launch a token, let's tokenize whatever, our factories we have, doesn't matter, and do it by starting to launch a token. And then later on, do some tokenization where the token is integrated into it, for example, yeah? I mean, just imagine that, having a launch pad that enables you to do, you don't need to do IPOs anymore, yeah? If you're a company, why would you want to list on a stock exchange, yeah? Equity, if you can actually tokenize, launch a token, and you are listed on an exchange that provides your token to everyone to buy, yeah? You have real assets, yeah, behind.
I think that's certainly possible, but I agree it's where it would be. I mean, you take a look at Apple. Apple's market cap is $4 trillion at the moment, which when you then compare that to the total market cap of crypto, $4 trillion is more than the entire crypto market is worth. So current market cap, let's have a look, see if we can pull it up here, is 3.6 trillion.
You just need to have Apple and Nvidia. That's $9 trillion market cap.
Yeah.
That's it. That's just two, Then count how many big other companies there are in the US.
But it kind of puts crypto into perspective again, that you've got like hundreds of crypto tokens, cryptocurrencies, tokenization of all sorts, and it all in total adds up to less than $3.7 trillion. So it's smaller than Apple, its entire marketplace. I think that just helps put it into context.
So the last month, I've been talking to several people and explaining what I think is going to happen. Yeah. Legislation in the US, companies can launch tokens. Just imagine this, the US has all the delivery mechanisms already. Yeah. Apple reaches what, 1.9 billion people in the world through their phone? Just the phone. Yeah. Imagine having an Apple token. and some guy in Indonesia or some small country in Africa, they can actually buy it anytime they want on their iPhone. There's already ramps on, ramp off, there's all sorts of things that are facilitated. So the infrastructure for money movement is pretty much there already, okay? There's no more problems around ramping on and ramping off, Apple just needs to put a wallet, and like Stuart said, they don't need to complicate too much, seed phrase this, seed phrase that, doesn't really matter. You have a phone, you have your fingerprint, that's it, If you don't want to have it on the phone, have it in your computer at home, make it simple, there's already quite a few projects that have simplified, it's just that they're not mainstream yet. But Apple launches a token, Samsung launches a token, that's it. 5 billion people on the planet on mobile phones through American technology, which is Android and Apple, okay? And then you have Google, and then you have Facebook with Instagram, Meta with Instagram, Facebook, WhatsApp, you have Google, you have Amazon. I mean, just look at all the tech. Think about all the tech the US has. It's instantly deliverable mechanism, So I see the world going into corporate currencies, I will not call them tokens. So corporates will be the ones who will have the currencies in the future, and the everything is still attached to the dollar, Now, when that happens, and I'm not saying it's going to happen overnight, okay, but there's a big chance it's going to happen in the next 5 to 7 years, okay? Then what we'll see is, as soon as we see one of these big names launching a token, then or the corporate currency, then there will be massive rotation from Bitcoin, Ethereum, Solana tokens, because I'm telling you, I would rather prefer to have an Apple token than have an Ethereum token or a Solana token. Why would I have that? Because Apple has real assets, real assets, and it's a $4 trillion company.
Well, if you extend that logic, if you've got a token which has got it's a true asset-backed token, which is more than most fiat currencies, then would you not then start using Apple tokens to pay your bills internationally?
Of course.
And Apple tokens to receive, which all of a sudden means that you're kind of undermining the US dollar as a
corporate currency. Is the future. They will dominate, and just think about all the problems that solves in terms of supply of US dollar, and printing more money. All of that starts to disappear over time. It becomes almost irrelevant, That will attach with thousands of stable coins that will be owned by banks or big entities in the US, makes the dollar relevant again across the world. So there will be instant swap between all of these corporate currencies and stable coins anywhere in the world by using one of the US technologies, which is the phone.
So you're almost talking about a stable coin that is stabilized not against the dollar, but against
the dollar. Against the dollar.
Well, no, because it'll be stabilized against the underlying asset, which would be Apple, for example.
No. I'm not talking about that. I'm talking about stable coins that are still US dollar.
Okay. Yeah.
And that's a very important distinction. And then you have the corporate currencies. They are their own currency. It doesn't matter, But the swaps can be back and forth between a bank, JP Morgan stable coin, which is US dollar backed, for example, It doesn't mean there's going to be stable coins backed by gold, There is already some of them. There's many other mechanisms to do that. But
that means there's massive opportunity for the swaps markets.
Gosh, it's going to be crazy. That's what I've been warning people. It's going to be ICO on steroids when this happens.
So time to get into OTCs then, over the counter markets. Well,
let's talk more next week about this, because I have a lot to say about this. I've been thinking what's going to happen in the future, and that's where the opportunity lies for everyone. Go to the next stage of evolution.
Okay, so this week we've talked about where we're at and the potential future. Maybe next week we can go into that in more depth, which actually is really nice timing because we're just about coming up to on the hour. So let's close it off there. Continue the conversation next week. That's a good one. And I'll thank Stuart and JT for sharing their thoughts. That's really interesting space. Elena, sorry that you couldn't join in on the conversation, but hope you found it interesting to listen to. And for anyone who's watching afterwards, come and join us because it could be an interesting conversation next week. So have a great week, folks. Bye for now.